Hello, everyone. Welcome to the 7-Minute Workshop. This is where we chat with experts and we break down timely, complicated topics that affect your business, and we do it in just 7 minutes. That's quicker than it takes to drive a quarter mile anywhere in Los Angeles. I'm telling you, people, just get out and walk. All right, sticking to our theme of project management and profitability this month, today we're diving into project accounting. We'll talk about what falls under this umbrella and how it differs from corporate accounting, as well as some of the challenges around it and how to overcome those challenges. And to dive into all of this, we'll be joined once again by NetSuite Vertical Product Manager, Adam Mayo. Now, quick reminder before I bring him on, if you have any questions throughout the discussion today, ask them in the comments and we'll get to them at the end of the conversation. And please don't forget, tell us where you're tuning in from. We know you've signed in from all parts of the world, and we'd love to give you a shout out right back. Finally, if you have any advice around project accounting or managing project profitability, we'd love to hear from you. Don't hesitate to drop your thoughts into the comments as well, and we'll share your insights. Okay, please join me in welcoming Adam Mayo. Hey, Adam, thanks for joining us.
Hey, Fritz. Good to be here. I heard the quarter mile and I think Vin Diesel, but I don't think that's why we're here.
No, he's a little quicker. Doesn't he text while he's doing that quarter mile, though?
Yeah, I don't think traffic exists in the world of Fast and Furious, but I guess that's a different conversation.
Yeah, well, then we'll make that a different topic. Okay, let's start out with this project accounting topic. What falls under what we call project accounting?
Yeah, at a high level, project accounting, it encompasses cost tracking, budgeting out your project, billing, and revenue. If it's an internal project, let's say we're doing an install of a server room for our IT team, they really just care about the cost and budget elements of it. However, for a billable service company, billing and revenue are critical to set up and measure, not only for the cash flow, what they're bringing in, but measuring project profitability. Cost tracking includes the cost of time for the resources working on the project, which might be a standard or blended rate, factoring in the resources' salary and overhead cost. Some firms even will allocate the direct payroll cost of the employee to the project. In addition to time, the hours that people are working, there's things like travel expenses, material costs for pass-through expenses, or inventory that's used against the project. Of course, on the billing side, that's measuring what we invoice to the customer. Revenue gets a bit more tricky, as there's various ways to kind of measure when I meet the performance obligation to a customer in order to properly recognize the revenue. We can talk about the joys of revenue a little bit later, but maybe to wrap up my long-winded answer here, once we recognize the revenue, we subtract all those costs that I was talking about, and voila, we have our project profitability.
Great, and hopefully it is profitable. How does project accounting, though, differ from what we would call corporate accounting?
Yeah, I mean, with corporate accounting, it involves all the debits and credits at its core, running financial statements, budgeting, financial planning for the overall business, as well as broken out by division, department, et cetera. Project accounting is more granular since we're dealing with specific projects. So for example, a project typically aligns with a service contract that was sold to the end customer. And that's going to define the contract amount, what the project is going to be worth and what they're going to have to pay, how they're going to be billed, as well as key milestones to be achieved. It really focuses on translating that service contract into tools to properly invoice the customer and recognize the revenue. And all along the way, every transaction needs to be tagged against the project. So ranging from, again, those hours from timesheets to purchase orders to customer invoices, or even journal entries for other costs and revenue, they all need to be tracked against the project.
And thinking about project accounting, does it change depending on where you are as a company in terms of size and so forth?
Yeah, it definitely depends, on the size of the company. For smaller firms, again, the project accounting tends to completely fall in the lap of the accounting team, or accounting person, I should say, generally if you're in a smaller firm. And so they're doing it all. They might work with the project managers who, again, smaller firm, they often might be the consultants too, to get updates on percent complete or milestones achieved. The accountant needs to know when to do billing and recognize revenue, as well as invoice approvals. They'll work with the PMs to make sure things are right before they send it off to the customer. But again, all that heavy lifting's on the accounting team. As companies grow, it does become unwieldy for the accounting team. They might have to have several resources that are working on all that setup, or you'll start to see firms hire specific project accountants, and they're managing the setup of a project so that we can do the cost tracking, we can do the billing and revenue recognition, and then of course the required reporting so that we can check in on the status of the project and if it's profitable or not. I kind of mentioned this before, but billing and revenue are always critical, in capturing cost and measuring profitability. That tends to depend more if you need to start tightening the belt as you look at the service offerings you have.
Adam, we have a few people saying hello here. Bradley says happy to be here and located in Pasadena, so avoiding some of that downtown LA traffic. Cynthia from Nashville, Tennessee. I love Nashville, Tennessee. Thanks for joining us, Cynthia. And Mahmoud says, thanks for the initiative. I am from Saudi Arabia. All right, just a little bit near me, right, kind of behind me, and hope to get there soon someday. Thank you for joining us. Adam, what are some of the things that can go wrong when you're trying to manage the profitability of a project?
Yeah, I mean, I'd say for one, and kind of alluding to what I was just talking about, it's not measuring it at all. A lot of small services firms will have their service contracts with some key customers, and they're just kind of plugging away. And certainly as long as the cash flow is good. However, if they start getting overwhelmed with additional work, or conversely, hopefully it doesn't get to this point, work starts to dry up, they really need to understand what projects and services are most profitable. If they get 5 requests in to do a project, and they only have capacity to work on 3 of those, which ones should they select? And so if they don't have the tools to analyze past projects or build out accurate estimates, they may not be working the right projects, which is going to affect the health of the company. Another reason it can go wrong is the information's in different systems, and project managers don't know a project is at risk until it's too late. Project managers don't have access to finance systems typically, so they don't really see the actuals. They might be managing the project and the budget in a separate tool. So again, they can't mirror up the actual transactions against a project. It can be a tough conversation when you're asking your customer for more money because you underestimated the labor effort, the material cost, the timeline, or all of it.
Sure. And talk about how NetSuite mitigates some of these risks.
Yeah, I mean, with NetSuite, definitely, here to help with some of what I was just talking about. Our professional services automation, PSA products, open air in suite projects not only provide a single tool needed, but access is shared across the delivery and accounting teams. So there's complete visibility to sales, project managers, operations, and then again, accounting. The billing and revenue is automated with flexible billing rules engine, and it supports time and materials, fixed fee, milestone, percent complete service contracts. Time, expenses, purchase transactions are unified, so we're able to easily tag those to projects, and they're immediately available for billing and revenue, but also reporting to drive your budget versus actual reporting, as well as project profitability. So the goal here with NetSuite is that those awkward phone calls I was just talking about can proactively be avoided as we understand the status of the project at all times.
Got it. Thank you. And just a couple shout outs here. Yapo from Dubai, also nearby here, and Michael. And Michael said hello from and has a flag. that looks, and Michael, maybe you can confirm for us, Western Sahara or maybe South Sudan or Sudan. Let us know so we can know if our flag guessing skills are up to par. I did want to ask just a follow-up question from earlier before we're going to turn it over to questions from the audience. So if you're tuning in, if you have a question, keep commenting, keep shouting out as well. We'll do our best to say hello and to answer as many questions as we can throughout the remainder of our time. We talked earlier about project accounting versus corporate accounting, but if you're truly doing this right, is project accounting kind of and corporate accounting, how do they come together? Maybe that's the question I'm trying to ask.
Yeah, again, it comes down to having those unified systems. So project accounting is going to feed into your corporate accounting. That's where we end up having the debits and credits and the financial statements, and so project accounting is an element of that. And so they're certainly going to need to work in unison, especially for pure project-based service companies. That's the majority of revenue and costs that are coming in the system. I mean, you certainly have some of your overhead and payroll costs for the team, but specifically the revenue billing aspects of it are feeding into corporate accounting. And so when we're really having a holistic view, we're able to kind of drive those departmental, those division level budgets and forecast plans based off of what's happening with your projects.
Okay, we have our first question is, how does project accounting drive project success? Or on the other hand, how can it lead to project failure?
Sure. Yeah, hopefully, again, we don't lead to failure here, but with any accounting, you're measuring the bottom line and margin. We're trying to eliminate manual processes and bill accurately, on time, and again, for these smaller firms, driving cash flow and higher margins and revenue for the business. Worst case, we have delays, cost overruns, and lose money on the project when that same awkward call results in the customer telling us, no, we won't pay you more. We had signed or agreed to a set dollar value. So again, where it can go bad, especially if you're billing on a fixed fee, those are good when you get the project done on time and under budget. But if not, there's a lot of risk that falls onto the service provider in that case.
Yeah, it really is important to create the right type of contract. From Mahmoud, he says, I think the most critical part of revenue recognition associated with whether allocating it over time or point in time. And you made an allusion to this earlier in our discussion. I mean, this is really, one of the more complicated parts of it. And again, comes back to, in some ways, how you set up the contract. What, do you have any general advice for people or companies trying to get revenue recognition right?
Yeah, I mean, part of it is to try to simplify as much as possible. But again, a lot of it is translating that contract, what you sold to the customer, and how you're doing the billing. And so I agree, it can be difficult to kind of project when we're recognizing it. And there isn't clear guidance in all cases as to when you need to be doing that. So you're trying to understand it, in working with your CPAs or other accounting firms too, to make sure that you have a process in place, it's well documented, and that you're able to prove out where you're meeting those obligations. That's key, is that we're adhering to the guidance as we understand it, as we're recommended from our auditors, and then having the backup. From there, we can use the tools to help automate that. But really, it's having it all structured out so you're doing it accurately.
By the way, our producer has tracked down that the flag was from Jordan, or was told that the flag was Jordan. So we did not, and that's nearby me too. I should know that one. I feel embarrassed that I didn't, although I haven't been to Jordan yet. Okay. Our next question is from Stephen. How can we include standard reporting dimensions, class, department, and project profitability detail reporting?
Yeah. Oh, so getting into specific kind of NetSuite speak and to a certain extent, which is great. Yeah. So again, it comes down to tagging the transactions, and there's also some automation that we can provide where we can tag a project with those classes, those dimensions. And then when you select that project on, let's say, a timesheet, an expense report, a purchase order, through automation, we can populate the assigned class department. And so now, again, all of those are reporting elements on a financial statement, but also on a project report.
Got it. Thank you. And thank you for the question, Stephen. Our next question is, you mentioned the critical variables of project accounting earlier. What's challenging about tracking these?
Yeah, this one, I feel like we kind of sound like a broken record, but it's what we see most with our customers for sure, is that it's disconnected systems. And so if I'm managing time in one spot, I have maybe a point system for expenses, we're billing out of our finance tool, we're having to compile all that information manually. And now I have a big opportunity for double entry, or I should say errors that are coming or resulting from double entry. And so now it's difficult to kind of track that. And then I really have no visibility, because again, going back to the project manager ultimately owns the project, the relationship with the customer. And if they're not able to access that data, or they're seeing it too late, now we're potentially overrun the project.
Our next question is, can you leave us with a couple of best practices or tips for project accounting?
Sure. Yeah, I mean, kind of as I was describing with the revenue question, where we need to define our processes, I think just for general project accounting is having good processes defined for how projects get set up with as much automation as possible. Certainly seeing with our customers where they'll send notifications and using forms or workflows, dashboards to eliminate manual steps in that double entry. Again, really leveraging the platform to have that flow through. And then another one would be providing visibility across the key departments. So again, I feel like we can start working in silos, and the tools are available to open up access and give people more information readily available to them, and make it proactive. And then also for those that, for whatever reason, can't get into the system, again, using reports and schedule those reports to be emailed out of the system, so that, again, we have a regular cadence of when we're doing those check-ins, those status updates on our projects are definitely a couple of the ones that come to mind.
Oh, we have a question from Mitch in the Philippines. What if the project is purely based on effort of employees, like content developers? How do you incorporate those costs into project accounting, given that it is value-based? And I think you talked about one of the ways companies do that, which is to include payroll directly into the project expenses. But any other thoughts on how companies tackle this?
Yeah, I mean, the easiest one, again, is that we need to have them entering time against the project, because as long as I know who the employee is in the time, depending on where we get the cost rate, we have a variety of options to do that. If for whatever reason time tracking is not possible, that now you're looking at trying to, again, you can take costs, but we're having to do some sort of calculation where we're maybe saying this percentage over. But I do tend to push people, if they're not tracking time, to capture those costs. It's more difficult to really get down to what effort was used.
Okay, well, that was fantastic, Adam. Everybody, that is all we have time for today. Adam, thank you for joining us once again.
Sure thing. Thanks, Fritz.
And as always, a big thanks to all of you for tuning in. By the way, we're going to be back with Adam on Tuesday, October 26th at 11:30 a.m. Pacific time, and we're going to talk about project billing. Now, we're skipping the workshop next week because we're going to be at Suite World 2021. And if you want conversations just like this one, join us virtually next week on Suite World On Air by registering at suiteworldonair.com. I think we have the information below on this feed. You'll hear from thought leaders about topics that are top of mind for businesses today. You'll learn from companies who've overcome the challenges that you might be facing in all the industries you're in right now. Network with fellow attendees and talk with NetSuite product experts and partners. And you'll also be able to tune into our live 2-day broadcast right from the expo floor. That's NetSuite TV, and you'll get some insightful customer interviews and panel discussions. You might even recognize your hosts there, and even hear a conversation with celebrity guest, Shark Tank star and entrepreneur Kevin O'Leary will be joining us, and our own personal celebrity, founder of NetSuite, Evan Goldberg. You're not going to want to miss this, so be sure to register now at suiteworldonair.com and use the promo code you see here on the screen, last call, for a discount. We'll see you there.